So it's come to be like a lot of my methodology for getting into and out of trades on what I find as the most premium setups. This is a great example that we just had happen here. And in fact, let me go make sure that my order got filled on the exit. Don't need to make sure. Okay, cool. I think we're still playing out. So what I'm seeing is we have really big impulse moves. This one didn't quite give half back. We got a secondary impulse, and it kind of rolled over. So we got a rounding top in here. You can see the primary bars. You got one here and one here. And it was a rounding top. This one actually did give a reversal, but it only gave half back. So we have half back of this trend here. So my qualifier is here and here. So when I'm looking for the 3-bar that I was in play here, this is the first bar, this is that doji, this is that other bar, and this is the range candle we're looking to trade on the 5-minute chart here, this 10-15 candle. And half or whole is typical target. So let me draw that for you. So just an eyeball is all you need. You don't need to be dead on with numbers and stuff, but about 455.75-ish on the QQQ here is about what I was looking for. Why is my drawing tool not working?
Okay, my mic's finally working. Can you hear me okay?
Yeah, we're having all kinds of technical difficulties with this. Okay, so this is my target here. I'm looking for half this bar back. That's at 18,740 target on the NQ. And the first thing I noticed was we had a bar, a spinner, and then we got a bar with half back. So this is basically the 3-bar setup, but it only gave half back. We opened, we stayed within the half back bar with this bar here. So my qualifier is looking for a break above this line of resistance here. So if you need to draw a line, you can, but look where the candles stop. It gives you a pretty good idea. I don't know why my drawing tool is being so stubborn on this type of
Wick
chart.
or body?
Body. Yeah, I always look at bodies more than wicks, although I don't ignore wicks. So the qualifier for this is breaking resistance, and I'm looking for half back. We did print a high wave here. We did shoot a quick scalp if we wanted to, but this is the longer term trade. I'm looking for a hold of the support area after a breach of it as resistance here in this bar. And I'm looking for a trend to give half of this range bar back. And if you look at the grand scheme of things, it's kind of right in the middle of our high and low. So that's about the mean of the low mean of where I'd expect consolidation for the rest of the afternoon, probably.
Well, it's also a fair value gap there as well.
Yes. And you can use any tool you want to find that. Fair value gap is one. I'm more immediate. I just look at the candles in play. And I can look at this 5-minute chart and pretty much nail down that my eyeball sees this at about half. This is the low range of half where I'd expect consolidation. So the actual half, if you wanted to find it, take your box tool, run the whole length here, and it's actually a little bit higher. So this is the low range of consolidation where I'd expect. That's half right here of the whole trend. So if we're looking for a qualifying trade to go bullish, I'm looking for a measured move out of this. And this is that 18,740 target right in here. But I also could simply just measure the previous bar. I could take this bar and stack it, and it probably puts the same target out, or actually it would probably give me about the high range of consolidation right in here. But I get the same general idea. And if I'm looking to scalp a qualifier, I've got this rounding top back here. Same process. It gave half back, came back, qualified above, consolidated within this range bar, give or take a couple ticks. You can see it, right here. Let me throw a pivot line there so you can get a better visual. Damn, my drawing tool's giving me fits this morning. So qualifier, it broke above. It tested it for support, although not quite. So we looked for the scalp. Here's your scalp. It ran above resistance. It gave this primary as a measured move secondary right here. And now we're pushing on up to that 18,740 target, getting closer. And all I had to do to look for that is figure out the previous impulse, this guy here. I'll push
So
it
where's
above
your
there.
entry?
So the entry for the 18740 target is finding a range above that qualifying bar. This is your qualifying bar on a rounding top. This is the one where I don't short these. I would rather take the long that comes out of them. And within that bar, we found it stayed in support. As soon as it broke out of the range of that bar, there's your bull. There's your entry right above that resistance.
So you took the break of that qualifying bar.
Yep.
Is that right?
Correct. And if I print the top of that, it's right about here. So this is your breakout bar for that, right there, that bar.
I got a question, Jeremy. Do you mind me asking now, or shall I wait until after the video?
No, absolutely. This video is to record this little session so we can.
So that qualifying bar there, the first one above the blue line, move back there. So about 20 bars along from that, it breaks above it. So at 11, 17, 15, there seems to be a break above it. Why are you entering on a bar much further away? There seems to be a bar that goes higher about 20 seconds after it, but you're waiting for about a minute and a half after it. If you get my point.
Right.
Or are you saying that you've got to wait for the range to develop first? Or what is it?
So first we've got to see that this is essentially what a rounding top looks like. So I never short these. I always like to take them long. In this case, it broke support on this bar, but it gave half back, found support, and then came back to that bar as resistance once, broke it on the second time. So it gave us the bar here. We could scalp this if we wanted to, but the higher probability trade is letting it consolidate here in about the same range as that previous bar, and then catch the qualifier of a breakout above it. Essentially,
Yeah, but we wouldn't have known there was a rounding top there yet on that.
Right.
And
we would have
so
seen this
you
one.
got that. You got your control bar, and so I guess the question is: the moment it broke it, why did you not take the trade?
So
yes.
if you chase it here, you have to realize it still has to get out of this range to really be a bullish.
Yeah, but we
trade.
didn't know that yet. Go left.
No,
So
we
there's
didn't.
your bar. Your bar at 11, 13, 35.
Let me synchronize the crosshairs here. There we go. So if we're looking into this area, we see a primary. You can see it didn't quite give half back, gave a secondary. Fairly high probability trade there, but in this case, we ended up finding some resistance. We see the market's getting probed here for higher highs. It didn't quite make it. Consolidated, gave back about half of that trend there. So this sets you up in the future for this is your range to break. If you're going to remain bullish, this is your range to break. But if you're trying to find the target on that, you could literally just take this impulse here and size it for a measured move, set it above the mean here and find the same target. That's all fine and good. And if you're watching it on the 5 minute chart over here, you know, this is that bar, that 11:15 bar, this impulse here. When I see this bar close and then the next bar is a doji, this is your doji right here. Okay, so if I'm looking for the quick scalp of half back, I can get that in this dip here. Watching that doji close, as soon as it broke support, sure, I can scalp for the half back target. But that doesn't have as high of a probability because we know dojis have long legs, they have long wicks. So you look at the next bar in this trade, and this is this section here, that printed a bar that was meaningful. So you have a bar that held support of half of that previous trending candle, and it gave us effectively a double bottom here. So you got L1, R1, L2. Broke above the mean, it tested it first, so you see test here, break, test it for support, qualifies there, gets above this resistance or R1, gets back into that range of that first bar from the first setup here, and then once that consolidation broke bullish, there's your breakout bar. You could scalp this. It gave a clean measured move here anyway. So it's just using this to qualify this as a high probability trade. You can take half of that target, that was at 18,740, would be what, about 18,720. And then you could wait for the test of support, which anytime we break a resistance level, it has a high probability of being tested again for support. Here's that. Right back down. Tested support. Qualified good. Another entry presented right above that range. Bam. Go bullish. Shoot for your 18,740 target. As soon as I
Okay,
entered
so
here,
what I'm seeing here is it looks like you're taking first of all you had a bullish bias.
right,
So you see a run north, then you see a 50% pullback, so or approximately a 50% pullback on a move. So are you saying that because you had a bullish bias on that 50%, that would have also been an entry to go long?
yes and no, it had to qualify. So this is just essentially explaining what qualifies a good entry for taking that secondary move. If I put in a 30-second chart, it might show up a little better.
But effectively, you're lining up the 5 minute with the 5 second, seeing how the candles develop on the 5 minute, and then drilling
Right.
into them on the 5 second to find patterns that would confirm your bias. Yeah.
Correct. And I don't always do that with a 5-minute chart. Just that this market condition presented that opportunity because this is our trend. Our half-back target is pretty well defined. We also know there's a liquidity zone, which we're entering now. We have a primary impulse move. And then in this candle, we had the half-back. So we got essentially the 3-bar setup here. It didn't have to give a full 3-bar. It gave a bar and a half. And then it qualified above this resistance line where all of these candles, including the doji, lined up. And then this qualifies for your quick scalp. This was your return to support test here. It gave you another entry here because this candle never broke support. It held and it ripped. So
Okay, so that's going to be you had a long candle north, bullish. You had a 50% pullback on the red candle. Well, you had the doji, but then you had approximately close to a 50% pullback. And then when it broke north of all that, you're saying that would be your long and your range would be the control bar right before the doji.
right. That's the play there for a high probability scalp. And there's more. If you wanted to range this impulse here, the whole thing, that's where we're going now. So it was a matter of, okay, we broke this resistance, which was defined by this collection of candles right here. If it's on the 1-minute chart, it would also show you. Same.
Yeah, but that's a different strategy because we don't have
Right.
a 50% pullback here.
Exactly. So in market conditions, we had a fairly strong trend. It was looking to give half back, which it did. And there's a key resistance area right here. You could also qualify it another way. You can look back and say, oh, well, there was a consolidation here. There's a flash of green. Same. It broke a resistance area. If you wanted to make that part easy, you could just simply go back here and grab yourself a liquidity zone on the 5-minute right there. All it had to do was break that to qualify for a bull trade.
All right, so your pullback and breakout is essentially a bull flag. It's very similar to a bull flag there because you've got a pole, you've got a small flag, and then you broke north of the flag.
Not
So that's
necessarily on
one
the
way you can
5-minute
look at it.
chart, but you could look at it that way on a 1-minute chart. You could certainly draw that out. You could go and say, okay, well, here's an angular here. Here's an angular here.
Can I ask a quick question about your mindset while that angular is going on? You're
Sure.
expecting it to consolidate at that point because it's meeting a point of resistance
Correct.
defined by candles at 10:30, 10:25, and 10:20. So there's an area of consolidation to be expected. So you're just going to see and wait for it to play out, yeah?
Exactly that. And then
So
as soon
you
as
you
it,
know that's your strategy, that's your setup, that's what you're expecting, isn't it? So we need to expect it to go sideways for a bit. It's just a case of what it does going sideways.
right, and it's really, really key to not lose your patience on this. You wait very, very patiently for what qualifies as a breakout. You can scalp this.
And where are you wrong?
If you're wrong, it's going to have to break through the mean of this consolidation. So if you're looking for an area where you would probably stop out and you would end up doing, protect capital at all means scenario, this is where you would have a failure and you'd actually take a loss on this if it broke below the mean of this consolidation.
By wick or by close?
Depending on what time frame you're on, because these wicks are going to be a 5-second structure that is not going to resemble, anything but a slight wedge here and then a break of half. Or this qualification would be, there's your mean test right there. So if you were on a short term, you would have got washed out on this and you would have been wrong. You would have gotten stopped out for a loss and you would have missed the move. So
Okay, so smaller time frames, we want the body. Larger time zones, we'll consider the wick.
correct. That's exactly what you need to see, because if you're looking at these wicks, these are structures of a 5-second chart or of a 1-second chart. It's all there. Those wicks have their own, measured moves and everything included. So like you could see, this wick here would be a primary. The close of that candle would be consolidation, and then this wick here would be a secondary, little tiny measured move on a 1-second chart right there. Just those two wicks. So if you're trading substructure and you're ignoring the wicks on the larger time frame to qualify, you can scalp that, but you would rather take the higher probability trade if you're not going to be nimble enough to scalp something like that, because that is such a stupid fast amount of time. You're going to have to come up with that plan and execute that plan in literal seconds between those two bars.
Can you go back to the 5-second and the 5-minute charts if they're synced?
I'm going to have to
So
scroll it back
on the consolidation part of that.
Yep, the second consolidation.
Yeah, the second consolidation. If you just hold, where your bar is, where your crosshair is there, just go left ever so slightly, there, just there at 31, I think, 11:31. There is a green breakout bar there, but
Okay.
no, if you go, there's one about 10 seconds before, 50 seconds before that.
50 seconds before this bar?
Maybe two.
Back here.
No, again in the middle. At 10:29:20 or 10:29. Bit further right. There.
This one.
What is wrong with entering on that one?
So you haven't broken the range of consolidation just yet. I mean, you could, but you're looking at taking an entry on an angular resistance test. So like if you're looking here, you would see this.
I see. Yeah. Sorry, my mistake. I see what you mean.
And you still haven't qualified a breakout above the second bar, which is you got one bar here, and this is a very choppy rounding top, but the second bar is here, and it didn't quite break that. So the higher probability trade would be entering on the break of this bar. Even though you're looking back here at a previous consolidation, you're using that to establish your range. So you don't get suckered in and stopped out on these runs here, because this is just compression. This is just probing market price, and essentially there's going to be some liquidity gathered here. And typically when you see stops get run, that's what it looks like. So anybody who got long on the wrong bar there, they got tripped out. I'd rather wait for the qualifier that gives me the break. Plus the other context, there's your impulse. There's your pullback consolidation. It almost gave half back even. This is where you would want to see a secondary. So you want to see a nice consolidation. Kind of plays into channel trades where you get the third impulse and you wait for your qualifying break. You could do the same thing there. So in your mind, you could go with this strategy. Draw your wedge out, It doesn't have to be perfect. Measure your second impulse anywhere you can see some price action or just the step, and drag that outside the angular. Does the same thing. Came up to that right here in this red bar, came back, tested half, closed a wick into half. Your qualifier is now above that. So you can enter on this bar here, or you can enter on this bar here. Either way, you can get that scalp. That's a pretty clean measured move setup. But the big fish requires a little further looking left, realizing that you're seeing this range on this 5-minute bar, and you're seeing a consolidation here. So the meat and potatoes move with the highest probability is break out of this range and run with that bar. And even though I had a little bit less of the meat off that bone, I still had a very high probability trade of it hitting that 18,740 target. So that's where I set my limit order to exit.
So you could also use a runner there for a full measured move.
Yes.
Take, say you got 2 contracts. For those that don't understand what I mean by runner, you have 2 contracts.
At 2 or
You
more.
take profit at the 50%. And the minute you do that, you're out of one contract. You move the stop to break even +1 for your remaining contract. So, and then the remaining contract is at a higher target.
Right.
And that's called the runner. Now, you really don't expect, you have to understand with a runner, you have no expectation that it'll do anything than break even. If it does continue, it's because you're, we'll call it lucky for the moment.
Or you're just right.
So, but that's what a runner is. It's an extra contract. That the downside to a runner is if you're wrong, of course, now you're going to take a loss on 2 contracts instead of 1. But if you've called a good entry on it, you've got a really good chance of getting a 2 or a 3 or a 4 measured move out of it, possibly, if you're willing to sit there.
Good point. The other thing is, and if you're using TradeAbate, it automatically does it. Like it'll have your entry line. It'll show you what price you got in at. Once that runner closes at your limit order, you'll notice that it reduces your cost basis on the leftover contract. So like it'll take that profit and it'll drop your cost basis by that profit. So like if you got in here and you took a profit on half your position here, suddenly your cost basis will be down by that amount of points. So it will put it down at just about the bottom of this bar. So that's kind of a cool concept. It puts that into perspective for you on where your actual cost basis is. So if it gets ripped down and returns back to the support, you're still netted a profit. So that's a good strategy to have, is to run, at least 2 contracts per trade. I tend to run 1 when I'm just building an account, but later on I'll run it to 2. And I find that I have a little bit more patience when I have 2 contracts on than I do when I have 1, because I know I can use 1 to leverage my cost basis down on the second one.
Thank you, Jeremy. That was really informative.
Yeah, no problem. It's tricky to explain what I'm going for when we're seeing chop. I mean, this is really, really hard to examine until you take some context into it of what happened before. So like when you see me scalping chop on a bigger time scale, like let's say we were looking at the 1-minute chart and finding that this is kind of choppy and nasty and hard to trade, it's tradable if you know what to expect from the chop. But you still have to take that context of what happened before into your plan, because you have to be able to understand that chop is usually just consolidation. And if there's a primary move, that consolidation has a pretty good shot of breaking into a secondary move, provided the previous trend is just offering half back. So you end up stacking probability stats until you have the highest probable outcome of a profitable trade. Those are the ones you take. So it comes down to a lot of being able to not get sucked into the really short time frame altogether, while still being able to maintain, a field view of the whole machine or the bigger pieces. Here we are coming back, testing that for support. Just neat. But you get the idea. Look for the higher probability trades. You've got to take those things into context. And if you can't keep a kind of a mind's eye on the bigger picture, at least, it really makes it harder to produce the higher probability mindset of what you can expect for the outcome on that. So in a way, it's being able to make those good analysis points stick when everything lines up. All the previous information is telling you that this probability of this secondary move is higher and higher and higher as you're adding the pieces together. The idea is to do it without shooting yourself in the foot. All right. Without any further ado, it's a good point to wrap, and then I'll get this into a video so we can reflect upon it and just put it in, I guess, a category of bringing it all together when it comes to the mentality, the analysis, and the probabilities, as well as where you need to be.
Yeah, stick it on watch list.
Webinars.
What webinar? Because it's a
Good point.
It's webinars dash watch list. I don't know why it's named that. That's kind of a strange name, but okay.
Can you call this video something like entry point strategy or something?
Or it's more of a planning your trade and then setting your entry and exit points. So I suppose it could be execution strategy.
Yeah.
Trade execution strategy. That makes sense. We'll call it that.